Hey everyone, and welcome to the Bitcoin Street Journal Market Update. I'm Zia.
And I'm Enzo. Get ready because today we're diving deep into all the wild things happening in the Bitcoin world right now.
Exactly. And we're not doing it alone. We've got extremely knowledgeable and a fantastic Bitcoin expert joining us today to break down all the latest news and trends. Welcome. We're excited to have you.
Thanks for having me. Glad to be here.
Awesome. So today's going to be packed, you guys. We're talking like BlackRock's ETF smashing records, some SEC shifts that are like actually surprising, and, a whole bunch of companies just like piling into Bitcoin.
Oh, yeah. Plus, we're going to get into some really interesting takes on, how to even think about Bitcoin in the long term. Basically, we are covering all the bases.
So buckle up, everyone. It's going to be a fast-paced, super informative ride. Let's get into it.
All right, so let's kick things off with something huge. BlackRock's ETF IBIT just became the fastest ETF ever to hit $70 billion in AUM. I mean, that's insane, right?
Absolutely, Enza. I mean, think about it. Smashing past the old record by like 5 times. It's not just impressive, it's a total game changer. It shows how serious institutional investors are about Bitcoin now.
Seriously, what do you think is driving that? Because, I still hear people saying Bitcoin is just for nerds or something.
Well, that's where Robert Mitchnick comes in, actually. He was saying wealth advisor adoption of Bitcoin is still very early. That tells you something right there. These advisors are finally getting their clients on board.
So it's not just like hedge funds anymore, right? It's actual people, with regular retirement accounts and stuff.
Exactly. And these wealth advisors, they aren't just throwing darts. They're doing their due diligence. They're seeing Bitcoin as a legitimate part of a diversified portfolio, especially now that there's an ETF that makes it so accessible.
I mean, 70 billion. That's a lot of zeros. So how do you think this early adoption phase plays out over the next few years? Does it just keep growing exponentially?
I think we'll see more and more advisors allocating a small percentage, maybe 1 to 5% to Bitcoin for their clients. And that might not sound like much, but when you multiply it by the trillions of dollars these firms manage, that's a massive influx of capital.
Yeah, for sure. So is this the signal that institutional adoption is really here for good? Or is this like a flash in the pan?
No, Enza, this is the real deal. BlackRock's not going to put their name on something unless they're, in it for the long haul. And this ETF success, it's paving the way for even more institutions to come on board. It reduces the friction.
Okay, so BlackRock's making moves, wealth advisors are getting involved, but it's not just them, right? I mean, what about these companies like the Blockchain Group, Cooler, and Strategy?
Yeah, exactly. I saw that each of them is raising a ton of money to, just buy more Bitcoin. What's the deal with that? It's not just a coincidence, right?
No, absolutely not. It's a trend, and it's really interesting. You have the Blockchain Group in France looking to raise 300 million, Cooler planning up to 300 million as well, and then their Strategy, Sailor's Crew, upping their stock offering to $1 billion for more buys.
$1 billion? That's Sailor being Sailor, I guess. But is it just hopium, or is there a real strategy behind it?
I think it's a multifaceted strategy, actually. First, they recognize, Bitcoin's potential as a store of value, especially with all the fiat currency shenanigans going on. Second, it can boost their stock price. I mean, look at Strategy, right? A big Bitcoin position makes them attractive to investors who want to get exposure to Bitcoin without directly holding it themselves.
So it's like a Bitcoin proxy stock.
Precisely. And third, there's the long-term game. They're betting, correctly in my opinion, that Bitcoin will just keep appreciating, right? These companies are positioning themselves to be major players in a future where Bitcoin is just way more integrated into, the global economy.
Okay, so smart and strategic. What about a smaller company like Cooler, though? They're not exactly a household name.
Right. But what a signal, right? Cooler probably isn't trying to be a Bitcoin proxy stock. They're likely seeing an opportunity to strengthen their balance sheet, protect against inflation, and potentially even use Bitcoin in future transactions. Like, who knows?
So, more companies seeing the potential in holding Bitcoin in their corporate treasury. It's not just Tesla and strategy anymore. It seems like we're seeing more of them.
And that's a huge shift from just a few years ago. It tells you how far Bitcoin has come in terms of mainstream acceptance. This isn't some fringe thing anymore.
Speaking of shifts, what about the SEC? I saw something about Paul Atkins, coming out in favor of Bitcoin self-custody. That's like a complete 180, right?
Yeah, it's kind of wild. I mean, wasn't the SEC like public enemy number one for crypto just a few months ago?
Well, things are complicated, but yeah, Paul Atkins, former SEC commissioner, says self-custody is a foundational American value. That's a big deal.
But why the change of heart, do you think?
A few things, I think. First, there's growing recognition that, not allowing self-custody is just impractical, right? How can you really stop someone from holding their own private keys?
True. It's like trying to ban cash.
Exactly. Second, there's a growing understanding that, self-custody can reduce risk, actually. If you hold your own coins, you're not relying on some centralized exchange that could get hacked or go bankrupt. You control your own destiny, in other words. And third, there's just the political pressure, right?
From who?
From, the crypto community, from politicians who see the potential of Bitcoin, and even from the courts, maybe. The SEC's track record in crypto cases hasn't exactly been stellar,
So it's like they're finally starting to realize that fighting against Bitcoin is a losing battle?
Well, losing battle might be too strong, but they're definitely reassessing their approach. And Atkins' comments are a clear sign of that, actually. It really changes the whole regulatory landscape,
So does that mean smoother sailing for DeFi and blockchain innovation?
Hopefully. Atkins even mentioned, the SEC needs to change rules to provide incentives to issuers in blockchain systems. That's huge. It suggests they're looking at ways to, encourage innovation, not stifle it.
Okay, but hold on. Does that mean the SEC's just going to let DeFi run wild? There's still got to be regulations, right?
Of course, but the regulations might be more tailored, more focused on protecting consumers and less on just killing innovation.
Okay, so the SEC seems to be warming up to Bitcoin. But what about the macro picture? I saw something about the U.S. issuing like a ton of new treasuries.
Yeah, I saw that too. Something like $10 trillion? Isn't that like a third of our national debt?
It is, and that's significant, to say the least.
So, what does that mean for Bitcoin?
Well, in a nutshell, it makes Bitcoin look a lot more attractive.
How so?
Because when the government prints that much money, it devalues the currency, right? That's inflation in its simplest form. And when your currency is losing value, you need to find something to store your wealth in, right?
Like Bitcoin?
Exactly. Bitcoin is a a limited asset. There will only ever be 21 million coins. So as the dollar loses value, Bitcoin theoretically should hold its value or even increase in value. It becomes a hedge against inflation, kind of.
Okay, I get that. So it's like a digital gold.
It's similar, yeah, although, Bitcoin has some advantages over gold. It's easier to transport, easier to store, and much easier to verify its authenticity. Plus, it has this whole potential for disrupting traditional finance the gold just doesn't have.
So basically, the more the government prints money, the more people might flock to Bitcoin?
That's the theory, anyway. And, we're already seeing some evidence of that. More and more institutional investors are starting to allocate a portion of their portfolios to Bitcoin because they're worried about inflation.
Partially, yeah, but also because they're starting to recognize Bitcoin as a legitimate asset class, actually. It's not just some internet fad anymore. It's a real store of value.
Makes sense.
It all comes down to supply and demand, right? If the supply of dollars keeps increasing and the demand for Bitcoin keeps increasing, the price is going to go up. It's simple economics, really.
So maybe we should be thanking the government for printing all that money.
I wouldn't go that far, but it certainly doesn't hurt Bitcoin, put it that way.
So speaking of prices, I saw this tweet from Joe Consorti saying that home prices have dropped like 99% in the last decade when priced in Bitcoin. That's intense.
Yeah, Joe's got a very Bitcoin-centric worldview. Let's put it that way.
Okay, but is he wrong?
Well, no, not factually. He's making a valid point. It's just about perspective.
Meaning,
most people think about prices in terms of dollars or euros, whatever their local currency is. But Consorti's saying, hey, what if we priced everything in Bitcoin instead?
and then everything gets cheaper?
Relatively, yes. Because Bitcoin's value has increased so dramatically over the past decade, So if you measure the price of a house in Bitcoin, it looks like it's plummeted, right? Even though the dollar price might have stayed the same or even gone up.
So it's more about Bitcoin getting more valuable rather than houses getting less valuable.
It's about relative value. And it's a really interesting way to think about long-term wealth preservation. If you believe that Bitcoin will continue to appreciate in value, then holding Bitcoin is a better strategy than holding dollars, right?
Okay, so I see what you're getting at. So you're saying Consorti's point is stop thinking in dollars and start thinking in Bitcoin.
Precisely. It's a mental shift, about what we consider to be real money.
Okay, so everything's getting more expensive and Bitcoin is going to be what keeps us afloat.
In theory, which is why all this talk about volatility is so important.
Absolutely. And that's where the ETFs come in, right? I mean, you've seen, Bitcoin's volatility has actually dropped quite a bit recently.
Really? I hadn't really noticed. How much are we talking?
Well, one metric put it in the 10th percentile, which means it's less volatile than like 90% of the weeks over the last decade. And that's despite hitting all-time highs recently.
Wow, so less volatile even with all the craziness? That's wild. What's the deal?
A lot of people are saying it's because of the ETFs. They bring a lot more institutional money, which tends to be less twitchy, I guess you could say.
Less likely to panic sell at the first sign of trouble?
Exactly. It's like adding ballast to a ship. It helps to stabilize things. And that reduced volatility, it's a huge deal for institutional investors.
Why?
Well, a lot of these big funds, they have volatility budgets, right? They can only allocate a certain amount of their portfolio to like risky assets. If Bitcoin is less volatile, it automatically becomes more attractive to them.
So it's kind of a self-fulfilling prophecy. The more institutions buy in, the less volatile it gets, and the less volatile it gets, the more they buy in.
Potentially, yeah. I mean, that's the hope, right? And it's not just about attracting new investors either. It also affects Bitcoin's potential as a store of value. The more stable it is, the better it is at preserving wealth over the long term.
So speaking of ways to store value, what's the deal with stable coins?
Yeah, I saw something about the stablecoin market exploding. What's going on there?
Oh man, stable coins are huge. The total value of stable coins in circulation has climbed past $250 billion.
No kidding. That's like a real number now.
And where was it before?
Well, it's more than double from a low of like a lot of it is just the demand for stable ways to transact within the crypto ecosystem. People want to be able to move value around quickly and easily without all the volatility of something like Bitcoin, right? So stable coins kind of fill that gap.
Makes sense. I mean, nobody wants to wake up and find out their coffee money is suddenly worth half as much.
Exactly. And you're also seeing a lot more real world use cases for stablecoins now, too. I mean, people are using them for remittances, for cross border payments, for all sorts of things.
So is it still just like USDT and USDC dominating the market, or are there new players coming up?
USDT and USDC are still the big dogs for sure. I think USDT's got like 62% of the market and USDC's around 24%. But yeah, you're definitely seeing a growing tail of other stables gaining ground, like DAI, Frax, GUSD. There are a lot of, smaller ones trying to break through. I guess the better choice could be to stake USDT and make good money.
Is that a good thing, you think? More competition?
Yeah, definitely. I mean, more competition usually leads to better products and services, right? And it also reduces the risk of one single stablecoin collapsing and taking down the whole ecosystem with it.
Kind of like how you don't want any one bank to be too big to fail, huh?
Exactly. It spreads the risk and it also encourages innovation. Different stablecoins are experimenting with different mechanisms to maintain their peg, and that's all good for the long-term health of the market.
Okay, so we've talked about stable coins and we've talked about, big money and regulations. What about something a little more Wild West? I saw something about Paraguay's president getting hacked.
Oh, yeah. I saw that too. What was that all about?
Yeah, that was weird. So basically, the Paraguayan president's Twitter account, X account, was apparently hacked, right? And
someone posted a message saying that Bitcoin was going to become legal tender in Paraguay.
Whoa! Hold on. They just went full El Salvador?
Well, no. That's the thing. It was pretty quickly debunked. The Paraguayan government came out and said, yeah, no, that's not happening. The president's account was compromised.
So it was a total fake?
Yeah, pretty much. It was a clumsy attempt to spread misinformation, I think.
Wow. That's kind of scary though, right? Like, if people hadn't caught on so quickly, it could have caused some real chaos.
Exactly. And that's the thing about the crypto space, right? It's still relatively unregulated, and there's a lot of room for misinformation and scams to spread.
So, always double check your sources, kids. Don't just, believe everything you see on Twitter.
Okay, so where does this all leave us, right? Is there anything else that we should be, keeping an eye on?
Yeah, any bold predictions that we should know about, something we can tell our listeners to either get excited about or, be really skeptical about.
Well, Arthur Hayes, he's always got something to say.
Oh, yeah, Arthur Hayes, the BitMEX guy, right? What's he been spouting lately?
Well, he's still super bullish on both Bitcoin and Ethereum. He's got really aggressive price targets for 2025.
Aggressive, huh? So what are we talking numbers-wise?
Oh, hundreds of thousands for Bitcoin, tens of thousands for Ethereum. I can't remember the exact numbers off the top of my head.
Wow, those are some serious numbers. So what's driving his optimism?
It's the same old story, right? More institutional adoption, more government debt, the continued erosion of the fiat system, basically everything we've been talking about today.
Makes sense. Yeah. So is he just all about the price, or is there anything else he's interested in?
Well, he also talks a lot about Bitcoin treasury companies. He thinks that, more companies are going to start holding Bitcoin on their balance sheets.
Like, strategy, you mean?
Exactly. And he thinks that these companies could become really valuable because, they're basically leveraged bets on Bitcoin.
So, a company like Metaplanet in Japan?
Yeah, exactly. Think Metaplanet, but on a much larger scale. Companies that are basically pure play Bitcoin exposure. He's really excited about that entire trend.
Interesting. So, should we all be rushing out to buy shares in these Bitcoin treasury companies?
Well, I'm not a financial advisor, but it's definitely something to think about. It's a potentially high growth sector, but it's also really risky, of course. I mean, everything in crypto is risky.
Okay, so wrapping things up, what are our main takeaways here?
Yeah, what's the bottom line for our listeners? I mean, what should they actually remember from all of this?
Well, you know, the big picture
is Bitcoin is clearly not going anywhere. It's becoming more and more ingrained in the global financial system. ETFs are a huge deal. Corporations are starting to take notice. And even the SEC seems to be warming up a little bit.
Yeah, that is huge. Even small steps forward are important.
Totally, I agree. So, where do we go from here? What's the outlook for the next, few months?
I think we're going to see more of the same, honestly. Continued institutional adoption, more volatility, of course, probably some regulatory hiccups along the way, but overall, I'm still bullish.
Well, that's good to hear. Thanks so much for sharing your insights with us today. I think we all learned a lot.
Yeah, thank you. Really appreciate your time and your expertise.
My pleasure. Always happy to talk Bitcoin.
So that's it for this edition of the Bitcoin Street Journal Market Update.
Yeah, we hope you enjoyed the show, and we'll be back next week with another deep dive into the world of Bitcoin.
Next time, we're going to be talking about the latest developments in DeFi and what it means for the future of finance. So be sure to tune in.
And don't forget to subscribe so you can keep up with the street and stay up to date with all the latest on Bitcoin. See you on the next block.